is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
So we got a little bit of a rout going on today off 49 on the S&P cash. So what is the volume would be my first question out here. I got to find it. Doing about 4 billion shares at 2 o'clock. So that comes up to about 6.9, maybe 7.2, which is good. Is it a blowout? No. Maybe we get that volume at the end of the day. But we'll have to see. Volume wasn't all that exciting in the initial stages. It's starting to pick up a little. But we'll keep an eye on it and try to gauge it in the next hour. So got kind of a down move, a little sour. Everybody saw those bonds out there and is scared. It always reminds me of, God, I can't remember the guy's name, James Carville, who after coming to Washington, D.C. with the Clintons, was to say, if I really wanted to come back as something, I wouldn't come back as can't remember what he said, a king or a queen or a pro boxer. He says, I'd come back as the bond market because I can scare anybody to death. And that's kind of what we had. The bond market kind of hit those magic numbers and made everybody run. Forrest, run. Anyway, down 50 points. Is the volume blowout like the 12.9 billion we had when we came back down the last time? The wheels fell off the wagon? No. Like I said, 7.8 billion shares on the CBOE consolidated tape would probably be the end of the day, which is, it's good, but it's nothing like we had that first time when we rolled back down. Options yesterday pretty much indicated that we go back to 2,700 for the 18th of May. We'll keep an eye on that. Today will be a very interesting day to see what we have. I've been looking at some of the sector oscillators, and you want to see these things actually come back down to levels that are interesting to find the lows. And one of the things I put in my newsletter today was that these things were setting up for, what did I do with it? It's got to be around here somewhere. There we go. What I was setting up here, I just have to look in there and find this. Is that? There we go. Is that we hit kind of all of them under the 9-day yesterday in the SMHs. That normally means you've got about 3 or 4, maybe 5 days at these lows. So what you want to look for in the next couple of days is maybe a little bit of bounce, a pullback on lighter volume. Maybe you get that Thursday or Friday and not much juice, and then you go into fund buying. And then you might find some lows in the SMHs out here, but it'd take a handful more days. What else do we have? You got NVIDIA at 219. That's still not below any of the big moves out here. It's going to probably be the strongest one in this sector because it probably has the least to do with cell phones and most to do with video cards. Let's take a quick look at that. In the semi space anyway. So I think you're getting close. NVIDIA has got this nice little gap that it's filling. It went up on 19 million shares. Today we've got 7.8 million shares. So while we are down, it's kind of broad-based. It is a little stronger on the way down, energy, not that much. But again, that would connote that maybe you get a bounce and then lighter volume and then a move higher if the market is going to move higher. But right now, not a whole lot. We're off 45 points on the S&P cash. Dow's off 565. The Nasdaq's off 148, and the Russell's off 15. So what else do we have? Well, let's get into a little history, and then let's get into some more charts.
Then it's all just a little bit of history repeating.
On this day in 1945, President Harry Truman learns for the first time the full details of the Manhattan Project, in which scientists are attempting to create the first atomic bomb. On this day in 1945, the information thrust upon Truman a momentous decision whether or not to use the world's first weapon of mass destruction, and he did not know about it before this first day. He had maybe a little bit of inkling as a senator in 1943. He'd gone through and looked and saw that there was a couple of $1 billion missing and started asking where it was. He was told not to ask any more questions, and that was it. And he did so, as many people did during the war. That's why it's so tough to catch fraud during wartime. But there's so many things going on you just can't ask about. When he found out about it, really didn't understand it. I'm wondering if that wasn't a bad decision to let him know maybe a little bit sooner about what was going on, so he might have a little bit better grasp when it happened. But nonetheless, within the next few months, we would test the bomb and then use the bomb twice. So anyway, let's get into some charts. What else do we have? Oh, I wanted to get those charts back up here. Anyway, like I said, I was looking at NVIDIA. We'll have to see if volume comes in. Yesterday, I had 10.7 million shares. Today, 7.8. So would that be about the same? Maybe slightly more volume, but certainly less than this 19 million volume on the gap up. So let's look at some other ones. There was some discussions in the den about how Intel was going to get rocked. Rocked, I said, by Chinese and U.S. trade policy. I didn't see that this is that big a deal. It's a bigger deal for Apple. The reason why it doesn't matter to Intel so much is they already made plants in China and had everything ripped off, so they moved to Taiwan. Unless China invades Taiwan, Intel's probably okay. Other companies were mentioned were Apple. Almost nothing that goes into the iPhone is actually made in China. It's just assembled there. They can call up, 10 million people to put these phones together in 5 days. And, that's how that's done. But the displays and the memory are made in South Korea. A lot of the other chips are made in Taiwan, in Malaysia, a lot of other countries. There's not a lot of chip business in China because they've proven that they will steal anything that they can get their hands on for intellectual property. And one of the reasons we're talking about trade right now and penalties against them for stealing our intellectual property.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And FCX, one of the harder hit stocks out here, it came out with earnings today. It's going to blow out its previous low. Looked pretty good going into earnings, but you don't want to stay too late to the party. We bought it in the daily newsletter at, I think, 17 and sold it at like 19.25 or something. It was a nice little move onto the upside, but like I said, you don't want to stay to the party too long. And we got out of that. But, yeah, pretty big hit. I mean, looking through the earnings estimate, it's pretty bleak. So I think it's it looks like it's well deserved. Let's take a look at some other ones. Of course, Google, the big question on it was whether and how much it was going to be affected by new regulations hitting Europe starting May 25th. These regulations are very still unanswered, and I was pretty surprised. I was listening to the earnings call, and maybe they got it in there when I looked up or looked out the window or something, but I really never heard anybody talk about it. So I have a feeling that they were hoping that Google would say something about it, and someone was hoping someone else would ask about it, but because Google didn't answer it and other people didn't ask about it, I think everybody's just assuming the worst, and everybody's kind of whistling past the graveyard on this one. Down on fairly decent volume of 4.66 million shares. Certainly looks like 984 is possible, and like I said, this would be kind of a nice little setup if the next couple of days you get under that $1,000 level with lighter volume than that 3.88 million shares. And of course, you basically are going back against a 5 million share low, which is that February 9th low. So you had a bounce. It didn't have all that much energy. You basically got your 50% retracement out of this thing, if that's what you're looking for. Actually, almost a 618 retracement. to the upside from that March 28th low to the April 13th high, and now you're down on fairly good energy. But again, it's kind of hard to figure out when these guys aren't going to tell you how much it's going to cost, what earnings are going to be in the future, and well, it's time to go and look for other stocks. Okay, we looked at, I don't think we looked at Apple real quick. Of course, Apple, everybody has finally come out with out of the woods saying that, of course, the iPhone sales are going to be slow. What you don't have today is the volume. You were looking for something around 41 million shares from that April 2nd and the March 23rd lows as you break through it. Now, you had some yesterday. You had 36 million shares, but that was short. Today, you have 24 million shares, so that's going to be about 32 million shares since you broke. It still doesn't mean in a rather nasty mood the market has right now that you may not see that gap at about 158 touched. It gapped up on the 12th of February, did so, well, on that 60 million shares. So that gap is going to be fairly decent support. So a couple of days wouldn't be beyond the pale to find that low tested on lighter volume and see that trading range, maybe between there and 170, something like that, where this candle came down on high volume, 64 million shares on the 20th of April. And that might set up that kind of trading range right there. What else do we have? I'm going to take a look at some other stuff. Okay, we're off 41 points. 2628.55 is the last tick I show. NASDAQ's off 133. Dow's off 512. Okay, let's take a look at some of these other stocks that we were looking at. Now, Facebook was kind of interesting. It helped accelerate on the downside, and this is on the back of an article that basically I don't know if I brought it up on the air or didn't. I just figured it would almost be piling on for Facebook, and let's do this so we can see it a little better. Okay, the article came out and basically was talking about, it got a lot of play today on Financial Infotainment TV, about many groups set up for selling of pirated material, Social Security numbers, credit card numbers, hacking information. Apparently, there were about 300,000 people in these groups, and it was well known. Now, I saw this article, I think, last Wednesday on Krebs on Security. That's Krebs. He breaks a lot of stories on security, and literally nothing happened that day. No one paid attention to it, but suddenly somebody else decided to run an article that basically ripped off Krebs on security. I think it was on Motherboard, and suddenly everybody's paying attention. And just kind of funny the way that sometimes these things work. Volume's not all that exciting in Facebook today. In fact, you're going into this candle that went up on 58 million shares on the 10th, and of course we're down 25 million shares so far, so about half the volume. Again, that support area at about 157 is what you're looking at, and we'll come back into it. Quick thing to look at CLF. Do I have any other things? Okay. Yep, Snap still hanging tough. I mean, there's a lot of stocks. For as much as we're down, it's kind of, all stocks are down a little, or most stocks are down a little, and that seems to be the worst part of it. Cliffs Natural's down on almost no volume today. This thing did spike higher to 32 million shares on the 20th. Did a kind of a bearish engulfing yesterday. On a little lighter volume today, I'm just showing 7.4 million shares. So, yeah, is it a big deal? I don't know. Is it just a little market gas? Now, here's where I don't put a lot of weight behind things that happen on Friday expiration and the 2 days following Friday's expiration, because guess what? These are option rollover days. And you see a lot of stuff happen on options expiration and the days after it, because they're basically putting on the options that'll probably run the rest of the summer. So again, when I looked at options last night, didn't change much. They kind of look like, at least into May 18th, they were still looking for 2,700 on the S&P cash. So could we just kind of bounce around in this area for the next month? I think it's certainly possible. I'll see the numbers tonight and see if they changed any. But my guess is maybe the same thing that happened last month, is that they get this market going down, they sell a lot of puts, they get everybody all bearish, and then kind of the market just kind of melts back up. Not a lot of energy, but just kind of melts back up, and all those puts go to money heaven after a few days. So we'll keep an eye on it. Anyway, Cliffs Natural didn't make a higher high. It's just kind of doing it. I think a lot of these stocks could just go into triangle patterns. And again, probably the thing that we would hate the worst is just being stuck at a level and not going up or down significantly. Certainly today it feels that way, being off 41 points on the S&P cash. But what can you say? When I come back, I'll tell you and my subscribers why I sold something back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll look at a few more stocks here. Microsoft down. Volume's not all that exciting just yet. This thing just bounced around this 97 level. You probably wouldn't like the fact that Microsoft tested a triple top in the 97 areas. You wanted something like about 49 million shares. And it's just kind of teasing everybody here. It may take a little while. I do think it still goes to 100. And maybe the lighter volume, at least so far today, tells you that. Could get back into $91. So it's just going to drive everybody nuts for a little while. Somebody's also looking at Snap. And yeah, there's a lot of these stocks. They're highly shorted stocks that are looking pretty good. I mean, today, relatively in the relative strength. Snap is one of those, got to $15.96 with 17 million shares so far. So you kind of into the worst part of this downdraft. But, you know, could this thing continue meandering higher back up to about 1950? I think the answer is yes. My guess is that we'll gap up, and just too many shorts and Snap is probably the reason. You know, eventually, especially in down moves, these stocks that end up being 30, 40, 50% short tend to be losers for the most part. Other massively shorted stocks like Tesla, you'd think this thing had fallen off off the turnip truck today, and it really didn't. You got to 244.59, which is a high enough volume low on 16 million shares, but you're down today on 4 million shares, and it's really not down that much. Actually, this little leg out here has been very light on volume so far. I think maybe another test of that 310, maybe 315 would be enough to get shorts off of it. And if they got off of it, it may be a good place to get on. But if I was expecting the market to lose its cookies, to yak, to blow chunks, I'd probably think that Tesla would be the one that everybody was all over. And right now it's selling, and nobody is, which always makes me think that, again, being part of options expiration rollover here, there may be a little bit more going on here behind the curtains where the men are pulling the levers. So we'll keep an eye on that. Did we get to everything else? Okay. See if there was anything else. We talked about Google, talked about Apple, Facebook, all these. I wanted to make sure I got to them. I want to look at PLTT today. Let's take a look. That isn't it. I missed it. Where is it? PTLT? Man, I can't remember that symbol. What's platinum? PPLT. Okay. Of course, I mean, we had a rocket for the dollar yesterday. Certainly looks like 92 is going to get kissed again. This one has been, in the precious metals, by far the best looking chart that I've seen in a long time. And it's kind of up to get a little bit today. But, you know, on the chart pattern, not too bad. It gapped up on the 9th with 126,000 shares. Got into it today with just 22,000 shares. Actually, a little higher out here. I'm not sure, but gold, to me, looks a little weaker, where silver and maybe these industrial metals like PPLT, the Platinum Trust, seem to be looking a little bit better. The downside is that this may actually go back and test 86 bucks out here, but you know, if you're looking for the best chart in metals, it continues to look head and shoulders above the rest, and I'm not sure about why that is. Maybe better car sales in the near future, maybe bigger industrial uses for platinum, because generally people don't buy a lot of platinum coins. But a extremely good-looking chart. So don't know why, but it is head and shoulders above the rest. So we'll take a look at a few others out here that I wanted to get to. Let's see. There were a whole bunch out here that looked interesting. When we were talking about this one, is if you were interested in a short play, looked rather interesting to me. Doesn't have a lot of volume off the top yet, But of course, it cratered on news of the CEO, Mr. Wynn, getting pummeled back on the 26th of January. Came down with 22 million shares, got tested with 9.4 million shares March 9th. And of course, the last few days, you've been having 2 million, days of this 192.75 high of March 9th. It's down today on 1.9 million shares. So is it amazing volume on the way down? No. Could this get back down to 170? Yes, which is a pretty nice trading range out here. But, you know, you're going to need a couple more days to confirm this. And it certainly doesn't look all that bad so far today. Certainly not volume off the top. But again, it didn't have much volume to begin with. But, you know, you've got a lot of resistance anywhere higher. So not a chance to actually go buying it today. You can give me a call, by the way, east of the Rockies, 877-927-6648. West of the Rockies, 877-927-6648. A little bit of a curveball there for some. Okay, what else do we have? FSLR. I wanted to see how some of these other peripheral energy stocks are doing. First Solar, a lot of these things are coming up on earnings. First Solar had its high on January 11th, $76.71. 6.3 million shares, got into it 4 million shares on April 18th. It's kind of come back and filled this gap up with light volume. I think earnings are coming in soon. Where is it at here? I think I had it. Okay. Give me just a second here. I want to get back to it. Come on. I don't know why this thing. Come on. There we go. FSLR. Okay, April 26th. So Thursday night for First Solar. So this is down a little bit on light volume, but again, you know, you're down $4 off the high. But you're certainly not down on volume. You got earnings in a couple of days. A lot of times I think you can find a lot of people piling on, and if these things are going to do well, or at least okay, you know, your chance to go short something like this is a lot better after earnings if they run all the shorts off. This thing can get back up $79 or so and just wash all the shorts out. To me, that would be much better play than trying to go in here before earnings. Doesn't look strong, but certainly not backing off that much. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And someone just posted in the den something we brought up back during the Facebook hearings, and that is that Facebook had gone out and wallpapered all of Washington with money before the hearing started. Interesting article out here basically saying that they gave a lot of money to Congress people in California. Not a surprise, not a surprise. Anyway, what else do we have going on out here? One of the stocks that I thought was very interesting from a business perspective has been Oracle. The reason why is Oracle came out with a thing called Java and eventually became a lighter version of that language for computers was made into JavaScript, which is used a lot on websites. But its cousin that's used for actually developing applications called Java is very much like what I use. In fact, almost all the commands are the same type of name structures. Anyway, Microsoft made their .NET product pretty close to Java. Now, one of the things that happened was Java was owned by an open source consortium that was part of Sun Microsystems. So they bought Oracle bought Sun Microsystems, and I think they're looking for ways to make some money out of Java now, and they're starting to go after commercial licenses. And needless to say, a lot of people that have been getting Java free for the last, 15, 18 years or whatever, are now kind of scratching their heads. Probably going to push them to Microsoft even more for using .NET with a non-royalty based system. I'm just wondering the wisdom of this. Either Oracle wants to kill it or they actually think that they can make some money off of it. Hard to actually tell now, but probably not a good thing going forward for the existing customers. I have a feeling that a lot of people will remember this in the days to come. Again, like most of these, at least so far, not a lot of volume, 8.5 million shares today compared to 15 million shares yesterday in Oracle. So you're basically at these support levels. There's not a lot of volume. Now, maybe that volume comes in before the end of the day, but certainly on Friday, you didn't have a lot come in the end of the day, and others. Okay, what else do we have going on out here? Let's talk about some of the ones. I think SAP. SAP is kind of the German Microsoft. They had earnings today. I wanted to see how this one reacted. Went a little higher earlier in the day. I think it was up about 3 or 4% pre-market. Opened that way, kind of slid back down. A lot of volume in this one today. 2.4 million shares compared to the 1.3 million shares on March 13th at 109.53. Energy, just okay from this April 4th low. Nothing to write home about. So could this just be in a trading range from about 111, the high you saw today, back to 106? It certainly could. We'll see about that. Another question about AAOI. And again, these stocks that are monstrously short aren't doing a whole lot today. And normally, if you're expecting the world to come to an end, you want to see these stocks that are highly short, like Tesla, like AAOI, getting really hammered. A couple of dojis, really, for the last couple of days in AAOI. Energy off this low at 2254, the April 4th low, is up there. And you can see, could come back to 26, but at this point, certainly on a pretty bad day, not getting a lot of the negative love that the market's spreading around. Off 45 points on the S&P cash. NASDAQ's off 140. Russell's off 15. The Dow's off 530. So we'll continue to keep an eye on this. And you can give me a call at 877-927-6648. And let's see, I got some more emails here. Let's go ahead and take a look at that. So wanted to look at some of the ones coming up this week for earnings. So let me do this real quick. One of the things you probably don't want to do tonight is miss on earnings. And after the bell tonight, what do we get? Texas Instruments, Amgen, and Wynn Resorts. iRobot, Cree, Illumina, Six Flags. Why don't we look at a few of these to see what's coming? TXN. Now, Texas Instruments makes a lot of chips, but they don't make a lot of high-margin chips. They make a lot of chips that are kind of commodities. This thing's sitting at the previous low of February 9th. It had $96.99 as the low. 11.5 million shares. Today on Texas Instruments, going into earnings tonight, 5 million shares. So I think you have the opportunity, if you were looking for one that could bounce out of here and back over $100, I think you probably have a pretty good bet that this does go back and hit over $100, unless these guys horribly whiff. And again, they aren't making a lot of real trick stuff. They make stuff that glues other really high margin chips together. So they may actually give us a good read. But it seems to me, certainly going into earnings, if I was short this thing, I'd probably cover it. AAP, which is Advanced Auto Parts, actually looks fairly good. A little higher today, a little doji out here. It's on light volume, but at least it's not going. It's going the right way if you're along this thing. And kind of a good-looking chart. February 9th, 103.28. 1.6 million shares got into it with 1.06 million shares. So basically, about 550,000 shares lighter. Energy off this 120.04 high was a little light. And again, these things have been beat up on the fear that Amazon's going to come after them and blow their house down. But so far, not a bad looking chart. Let's see some other ones out here I wanted to look at. I think the IRBT got absolutely eviscerated on some of the previous earnings. There we go. Go back to February 9th. And this thing got blown apart. Now, on this one, we're testing a 5.7 million share low of February 9th at $55.77. Tested it yesterday with 2 million shares. Today with 1.4 million shares. So again, a lot of these things have had a lot of people piling on. I think you might be staying too late to the party on a handful of these. So just keep an eye on it. What else do we have? Let's take a look at Six Flags. Normally one that does fairly decent in the summertime, especially if the some issues like higher gas prices, that kind of stuff, make it car trips maybe a little bit more affordable than plane trips. Now this one's back to the support where we go back to March 23rd. That had 1.1 million shares. We still have that 1.1 million shares today. So $57, that gap right there. It's like this is it. Not blowout yet. Maybe a good setup buying for this number.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Okay, now what are we looking for tomorrow morning? And that is Boeing. I think that is going to be the bellwether. We've got a few other ones. Twitter tomorrow morning, Comcast, General Dynamics, Northrop Grumman, Rockwell Automation, Boston Scientific, Hess, Trivago, Norfolk Southern, Yandex. But the one that's probably going to move the market is certainly Boeing. Boeing went a little higher, reversed today, and lower. My guess is we're getting a lot of people short today, and I would not be surprised if this thing starts trading pre-market somewhere around 345 tomorrow morning. Again, there's a lot of stocks out there that have some real weaknesses. Tesla in its business practice, real weakness. Problem is, it's got too many shorts. Boeing, virtual monopoly, and actually may be a true, well, it's certainly a duopoly, but certainly could be a monopoly in the near future. Just very tough. They've got the premier airplane. They've got yet another premier version of this that they're going to call the, I don't think they're going to call it, other people are calling it, the Airbus killer out this summer, the 797, where maybe up to 3/4 of it will all be carbon fiber, and vastly reduce the amount of weight in the plane. And of course, when 80% of all the money that an airline has goes into buying fuel, that's a pretty big savings, and why Boeing's done well with their GE engines and Boeing aircraft, just the best combination for fuel mileage. So anyway, that's going to be it. How that reacts in the morning, I think, is going to tell us a great deal. Basically, options rollover is going to be over by the morning, and I think we're going to see a great deal of movement tomorrow. But that's going to be it. You're going to be wanting to watch tomorrow as the day we get the real signal on which way this market's going. In the meantime, sow when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th, for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.